What's up, YouTubers? Ken here from Dyslexic Investor. I want to wish everyone a early Happy New Year, and just in case if I don't make a video before then. That being said, let's go ahead and just jump into today's video. We're going to be looking at something I caught my eye on Instagram. I'm not really active on Instagram. I'm more of a lurker, and I follow things. And I follow Yahoo Finance, and they put out this post this morning. Basically, the caption is that most bullish Wall Street firms see the S&P 500 ending 2020 at 3,600. 3,600 on the high end, and then 3,000 on the low end, and then of course 3,333 right in the middle. And then if you just go through the comments, it's kind of a bloodbath. First of all, if anything you know about Instagrammers, you're just gonna get a bunch of those what's it called? The Forex guys and gals of just like, oh, I made $10,000 trading this and that, but it's, you know, it's all baloney. A couple of the funny people posted is people posting like, yeah, long live bull run. That's from Wall Street Stocks. We have some other people saying that what did you ask? Did Yahoo Finance ask the bearish firms? What did they say? That's the stuff that was funny. And then a wizard said any 5-year-old kid could give this prediction, either go up or down. That was funny. Some people were giving some good advice. So Frams said low interest rates equals cheap debt equals stock buybacks equal accumulation organic unstable pump equal eventually mega collapse. Trade wisdom. So basically what he's saying is if debt's so cheap, interest rates are so low that companies are going to borrow money and take that money, instead of paying 2, 3, 4% on that thing, they can reinvest that money into the company and pay it as a dividend and have their stock go higher, which some people predict that will be the next collapse. That being said, so we're just going to break down this particular pick. So the pick again is 3,600 is the high and 3,000 is the low. Again, I kind of ran some charts and some indicators. I'm like, how did they even get there? Where they're just pulling numbers out of their butt, this kind of thing. So I did this actually on the SPX, which is an S&P 500 traded index. And you see my two lines here. The 200 is the high up here, and then the 3,000 down below here. So if we traded from today, we closed today, so they're saying we are going to go up 11% or we're going to go down like 7.5% in this time period of next year, or we're just going to be trading sideways and maybe go up a fraction of that, which would be like 3 or 4%. Again, to put in context, we've had like a 27 to 30% year so far. Again, the year's not over yet, but we'll see on what the year end will close. This has been a monster run. Yes, we've had a lot of pullbacks, but the 200 has been holding like it's been fantastic. Like this 200 is really supporting the long-term trend here. And anything pull back to this 200 means in the long term of things doesn't mean jack. Just continue to going higher. But again, this 200 is catching up. It's not laying flat, like it's continually going up towards the right. So if you look down more on a daily side, on the RSI here, we see it. We're coming off being overbought. Ugh. Got a yawn out of nowhere. As being overbought, it's no longer red. It's coming off. Momentum is slowing down. It's still so difficult to gauge this due to the fact that where did that chart go? My chart disappeared, boys. My volume. What happened to my volume? I had a volume on this. Anyways, we'll have to go through and add that. We can go look on here. On this chart here, should have this one. Oh, you know why? SPX doesn't have volume. Let's go to SPY. You still have very lackluster volume here. This is nothing compared to what we have seen on average. So if we go right here, yep. Down here on the average trading volume, we are the little yellow line here. We are below the average trading volume. You can see most days we are above it. We are double it on very heavy capitulation or reversion days, or whatever days you want to call those. That being said, let's go back to SPX and analyze how these, doing air quotes, bear or bullish firms figured this out. Again, it's just an Instagram post. There's probably not too much thought behind this. Like one of the comments said, a third grader could have made up these numbers. They're just super round numbers, right? So 11% up or 7% down from the high. It's reasonable. It's not a dead split in the middle. They are being at least a little more biased to the bullish side of being higher than it is lower. If they would have said 11% up or 11% down, then it would be like, okay, that's you. Now we're just talking a coin flip. The article or the post doesn't even say if it will be, if it's just going to hit there and go back up, or is that's where we're going to close. But it says actually it sees the S&P 500 ending 2020 at this level up here. So in theory, we can blow past this, but we can still come down. So these predictions are, again, not the most lackluster or the most in-depth. It's just putting this information out in the world. The only thing I kind of somewhat agree to the lower end of things, technically speaking, these are multiple supports here. You see this is on a daily chart, so this is in like the summertime between like coming out of May into June and July. We're hitting this like these little mountains up here, kind of came back down, tested 200, came back up, tested in August and a little bit into September, and came back down 200, and then continued to climb higher. This could be an area of coming back down. That would be a drastic drop, as we could speak. But again, it's the stock market. Like most of the comments said, anything can happen. There's nothing crazy besides the trade stuff, and then of course elections coming up. But there's always a blind phantom issue that no one sees, and that just comes out of nowhere and could smack you the side of the face. But that being said, I like to know what everyone else's predictions are, or just throw a dart on your chart and just give me a number down below. Don't forget to slam that like button, and if you want to see more of these technical analysis videos, please subscribe. This is Ken from the Dyslexic Investor. Peace.